everyone. My name is Paul Long. I'm Assistant Vice President of SBA Lending with Giza Credit Union. We're the #1 SBA 7A lender in Washington, Oregon, especially when it comes to business acquisitions. And I am joined by Mr. Seth Rudin, who's the Senior M&A Business Broker with IBA. Seth, tell us a little bit about IBA.
Sure. Thanks, Paul. So glad to be here. IBA stands for International Business Associates. We're a sell-side business brokerage, and we represent privately held and family-owned businesses throughout the Northwest. We operate mainly out of Washington and Oregon with headquarters out of Bellevue. We have about 20 brokers on the team, and we, as I said, represent family-owned and privately held companies across a variety of industries. We help them value their business and plan for an exit. And then we take them to the market and help them secure their buyers and help them negotiate all the way through to closing when they get paid. And we're also commercial real estate brokers, so we can handle the real estate as well as the sale of the business. We only represent real estate that has a business tied to it. And we're a success-based company. We've closed over 4,300 companies since we were founded in 1975. And we look forward to in continuing to collaborate with businesses, with yourself, and as we help them get financed.
That's perfect. And you guys primarily deal with sellers, is that correct?
That is correct.
Gotcha. Perfect. Well, hey everyone, here's the point of this video. We both, Seth and I, are very passionate about what we do in our careers, and we want to share with you kind of some of the processes and things that we go through. So in this specific video, we're going to talk about the business transition process from, okay, I'm interested in this business, to here's the keys, oh my God, it's mine. And maybe some of the issues that happen in there. So we're just going to kind of dive into that. The first and very most important thing is, if you're interested in buying a business, please get pre-qualified from a lender before you really start shopping. It's like trying to buy a house and not getting pre-qualified. You get all excited about something and then you get to a no. I mean, man, that's a lot of mental anguish, if you ask me. So, make sure you reach out to a great SBA lender like Giza Credit Union, who can really help you through that process and get you ready and give you some ballpark of based on your experience and income, where to go to buy a business. Knowing the business that you're buying, what are some things, Seth, that that can really help through that?
When you buy a business, this is going to be your new second life, right? So it's a big commitment. You can buy a house and you can flip it in a year, but you can't really do that with business.
No.
Buyers want to see a valid, business with continuity, like 5 years at least. So unless it's a very unique business that's profitable, it's going to be very hard. So you got to really know you're passionate about that business, or that you have a great team in place that you can manage and execute well to do it. And when you have that down, like Paul said, you get the finance aspect behind it to know what your budget is, and having your files ready, because when you get the point to making an offer, one of the big contingencies will be bank financing. And we're going to ask for a personal financial statement. The bank will ask for it. The business broker is going to ask for it to make sure they're protecting their client. And you're going to have to get a term sheet usually within 10 days of that offer for you to secure that deal. Otherwise, I'm sure it'll be a competitive marketplace and another buyer will be there prepared that you weren't. And negotiation is all about preparedness. 85% of deals close because the party's prepared for it.
That makes all the sense in the world. And those who come to me prepared, I almost shed a tear, because it's like, it's so rare. So please do that. And so, the next part of the process is, getting an LOI. So Seth, tell us what an LOI is, except for just 3 letters. What is it? What does it do? And what's the difference between that and a purchase and sale agreement?
Sure. LOI stands for letter of intent, and it's used to start the process to make an offer. Usually they're non-binding. They do usually come with an earnest money check to show that you're sincere and you're going to stand behind it. And it's used to document the key commercial terms that'll be transferred into the legal document, which we'll talk about in just a second.
Mhm.
And this sets the stage for the seller to consider to accept your offer against other people's as well. And it also allows you to provide contingencies, post offer acceptance, so that you can, if due diligence is not there, or if the landlord, if it's a lease building, doesn't accept you as the new tenant, or bank financing doesn't approve you, so you can back out of the transaction and get your money back. Otherwise, if all the contingencies are met, then you should continue on. And the legal document now, which we'll talk about, it's called the purchase and sale agreement or the stock purchase agreement, depending on the type of sale. There's an asset sale and there's an equity sale. We'll keep this simple. And the purchase and sale agreement just defines all the legal terms that will be bound for. It covers what you're buying, whether it's stock or assets, which assets you're buying, how much inventory is coming, equipment, and then any reps, warranties, or indemnifications from the seller to the buyer. And also there might be some reps, warranties, and indemnifications from the buyer to the seller as well. Once that's signed off with a bill of sale, you typically have closed on the business, and now you're the rightful owner of the company.
Gotcha. Yeah, and those are two very important things. A lot of people think that the LOI is the purchase and sale agreement. I've heard that multiple times, and no, it's just like you said, it sets the table on what the expectations are. Another thing during, when you have that LOI in place, et cetera, is, at least I'm hoping that you would do your own due diligence as well. There's a lot of research that you as a buyer need to understand, not just the financing piece or, hey, I understand, you really have to understand this business. You have to understand the people, you have to understand the financials. You really have to get down. And one of the questions I always ask is, what due diligence have you done? And if they can't answer that question, that really makes me raise an eyebrow to what kind of business owner they are, because you're buying an investment. You should be doing research.
Exactly.
And and so also during this time, this is where, the banks, really start getting excited, because we're going to start going through your financials, yours personally and the business itself. And, a lot of people say, well, the business finances are great, mine are okay. Well, hold on a second. It takes two to make a deal. The business financials are critically important, but you as an individual is very important too. Your personal financial statement, your savings, your credit score. So those are all things that you will definitely need to do. What kind of down payment? How are you prepared for this? Do you have a down payment? Are you borrowing the down payment? Do you have a gift as a down payment? There's a lot of different ways to do a down payment, but are you ready for that? Have you done your research? And again, going back to the first thing that we talked about, you really got to be ready for that. And bank financing is popular, but you know what? It's not the only way to finance a business. It is absolutely not. There's cash buyers. There's cool programs called RODs where you can borrow against your 401k. There's ESOPs. There is a ton. There's investors. My gosh, there's a lot of different ways to do it. And even in a lot of ways, you can take those pieces and merge it together to make it happen as well. So it's really important that you understand that. We're going to want to get an appraisal on the business itself. We're going to want to make sure that it values correctly. We're going to do, title searches and all that fun real estate stuff that we do. And then once we get all those in, then we step back and look at the entire picture. Okay, here's the business. Here's the appraisal. Here's the valuation for the company. Does it all make sense? And does it smell good? Does it work? And if it works, then it's something that we're going to be able to do. And if once it's approved, then you can waive like a financing contingency. And I'm going to tell this right now, because this happens. I lose sleep over this when I have a customer that will actually sign off on contingency before the approval. I think it's the most scariest thing you could possibly do. You could be throwing away your money on that. And God knows I don't want anyone to do that. And then after that, you go into purchase and then you get the purchase and sell agreement that Seth talked about. You work with your escrow to close, and then you kind of get the keys. So, it's there's a lot of steps as we went through, and each step we could probably do a whole nother video on, Seth, on each individual step. Is there anything else you can think of, Seth, that would be, kind of also important to know as you're going through and finalizing?
In the due diligence process, you want to be timely,
Yep.
so that you get everything done and you've looked at all the aspects, being reasonable. You can't overanalyze too. There's a lot of analytical people who could just stare at questions after questions, but reasonably pass what you just referred to indirectly as the sniff test. And then keep the progress going, because tying yourself up in a transaction, if you find out you can't get the financing, you could adjust yourself as a buyer, right? And the seller obviously wants to achieve their objectives. So just surround yourself with the right team of attorneys, CPAs, bankers, so as a buyer you're executing, and the seller wants to do the same to get the right tax allocation for how to handle all those things. And the attorneys on both sides, and make sure they're attorneys that understand M&A. Don't hire a
Oh
regular
my
business attorney
God.
that's never handled it, and they make a mountain out of an anthill.
But my brother's an attorney. He does DUIs. I mean, isn't that close enough?
It'll be great. Let's pay him like a taxi driver to bring up the meter.
Exactly. Well, hey, Seth, I want to thank you for your time today on this, and I sure hope that our viewers got a lot of good information on this. Again, we're very passionate about what we do, and if we can help you in your business, please reach out to us with our contact information below. And otherwise, we will see you again on another video. Thanks.
Thank you, guys.